tuned into Closing Trades on ET Now. I'm Anisha Jain. With me, Sasha Faridi. And for now, the markets continue to hover in the red. In fact, we have broken the mark of 18,800, very close to the lowest point of the trading session. We did try to recover on an intraday basis, but that rally has been sold into yet again. The markets are back at the day's lowest point of the trading session. Of course, it's the day of weekly options expiry, so there's a bit of a volatility on account of that. Both the Nifty and Nifty Bank's weekly options expiry today. Bank Nifty was managing to show some sort of outperformance. Of course, it's given up and it's in the red, but still, as compared to the broader markets, it's holding out better. Today has been a day where the broader markets have underperformed. Remember, for the last 20-25 sessions consecutively, we were seeing that it was the broader market was the space where the party was. They were outperforming. Today, there's a bit of reversal. Sectorally speaking, it's IT pack, which is on the back foot. Morgan Stanley early morning downgraded this sector, and a couple of companies cut the target price as well as their EPS estimates for the year. And of course, the news flow around Wipro, TCS as well as Accenture is something that we are watching out for. What's interesting today is the fact that the underperformers are actually holding out better. So whether it's HDFC Twins, your HDFC Bank, or you have ICICI Bank for that matter, or even Axis Bank, they were the ones which were holding up in the green while the rest of the market was in the red. So that, of course, is interesting at this point of time, Asha.
Yeah, absolutely. Just looking at what's really dragging the markets lower, and it's a clutch of names actually. Let's first address the large cap names there because there's Tata Steel, that adjustment taking place, Bajaj Finance, Tata Motors, Tata Consumer, Infosys, and Asian Paints as well. These are the stocks under pressure. But you know what? It's no different even for the broader end of the market because India Cements is now around 6%. There's IDFC First down 5%, M&M Finance down 5%, AB Capital, L&T Finance, all these stocks are actually dragging lower. Kunal Naresh on the show as always. And Kunal, just when you think that you're just about there at the all-time high for the Nifty, again it flatters to deceive.
Yeah, I think some more wait for the index I think
some
today's...
more trades.
So, today's day is more of a bit of a mixed bag because, the performing stocks, some of the names which you mentioned, the likes of L&T Finance, AB Capital, etc. These are the stocks which have done exceptionally well over the last 1 to 2 months. So, there is a definite wave of profit booking into these stocks. And the large cap stocks, the likes of HDFC Bank, etc., L&T, many of these stocks have picked up pace from where they were a bit more sideways over the last many days. So I think it's a bit of a churn which is playing out on the index. We're still trading about the key supports of 18,600 on the index. So hopefully, if there is not too much of a follow through on the downside for the index over the next 1 or 2 days, and if we hold on to that 18,600 mark, we could probably be looking at a dash back again towards the previous highs, as well as a possibility of Bank Nifty emerging as a strong sector, which has been actually a weaker sector over the last 1 or 2 weeks. I think that could probably find its mojo back.
Okay, let's see whether that mojo is back or not. Quickly, Naresh, your take and what do you make of this outperformance from HDFC Twins, ICICI, Axis today? Is this a bit of a more meaningful breakout or you wouldn't put too much credence there?
So I would be looking at it as a very positive sign. So 1580 odd levels for HDFC Bank held on. And now we are at a say a 10-20 day high. And now the next level is 1700, 1730. Same way ICICI Bank earlier 935 was a support, broke down below it, but did not see follow-up selling and has recovered back to 930 levels, coming close to it. So Axis Bank also has not seen any follow-up selling. So banks now start looking interesting because a lot of these banks have come at interesting price points and showing reversal signs. Now watching out for 940 to cross on ICICI Bank, that would actually trigger the whole Bank Nifty as well. So overall, till the time we hold on to this 18,600 on the Nifty, 43,400 on the Bank Nifty, the bias still remains positive. We will continue to see this jitters around the all-time highs with today some expiry action, etc. But overall, till the time we don't break significant supports of 18,600 or 43,400, the bias should remain positive.
Let's welcome on board Sandeep Sabharwal as well and find out what he's making of the market. Sandeep, I guess the all-time high on the Nifty will happen when it has to happen. But let's discuss the constituents, Sandeep. And it's getting a little tricky for the banks, right? Because they haven't been able to catch up with the rest of the sectors, at least off late. What do you think is, going to be the next move from an HDFC Bank and the financials as well as a pack, which actually has come to the fore in the past couple of trading sessions?
Yeah, I don't see any big concern per se on the financials as well as banks on an overall basis. Now, what we'll see is that the large private sector banks will dominate the performance even as we go forward. The only thing is that unlike the last 2 years where reduced write-offs, write-backs, increasing net interest margins help the profitability growth, all of those things will not be there now. The net interest margins will compress as the deposit rates go up and the lending rates, the difference essentially goes down. And we will also not see the benefits due to lower NPA accretion because that touched a record low last year. So I think earning growth is going to moderate, but the balance sheets are extremely healthy, and to that extent they'll continue to do well. Smaller financial insurance companies, etc., had a catch up, which and the catch up was quite significant as the larger financials underperformed. So I think that also has played out. Overall market construct, I don't see any big issue. Whenever we come near a new high, there will always be people who got stuck at higher levels when the market hit that peak earlier, uh, 7, 8 months back. And those people want to exit the market. So that always happens. So I think there's always consolidation around new high formations. But directionally, I think the market will still do well.
Markets will still be bullish. Sandeep, what's the view on IDFC First Bank? Do you agree with the fact that perhaps the stock price has run ahead of fundamentals, or do you see more legs and more turnaround to play out for IDFC First Bank?
Yeah, so I think the transformation, turnaround, etc., all that story is valid. The fact of the matter also is that the stocks run up from 30 rupees to almost 85 rupees in a period of a few months. So then this move then becomes excessive as the valuations have gone above sustainable levels in the near term. Longer term, the story obviously is still strong. So I think it has to give up some of those gains, then consolidate, then get set for a new move. So I think that in the near term, it will be tough for IDFC Bank to outperform from here.
Stocks and news, IDFC First Bank, but let me quickly talk about some of the other stocks and news as well. BSE is one stock which is doing quite well in the trading session. There was a SEBI circular that came last evening which talked about a standard format for clients' trading preference. That meant that the aim is to ensure that clients are permitted the access on all the exchanges, and that means that the brokers will have to register themselves on all the exchanges. So more business coming in for BSE. That's the reason why that stock is higher. Bharat Electronics, or BEL, is the stock on our radar. That stock is trading at 52-week high levels. We spoke with the management earlier today. They are talking about how orders of around 5,900 crores have already been received, but they are L1 in a lot of orders as well. They've already achieved 30% of their order inflow guidance for the entire year already. And as far as the FY24 targets stand, they're talking about a 17% growth on the top line and the margins between 21 to 23%. In fact, on that note, listen in to the management of BEL. Okay, so we'll try and get the video of the management as well, but let me ask the view from Sandeep on Bharat Electronics and the other defense names.
Yeah, Bharat Electronics is the oldest, most steady defense names in the market. So, and it's been one which has not had a sort of parabolic kind of move like many of the others. So I think it's a steady move. It should continue to do well. I don't, for whoever is holding, I don't see any reason for them to sell. And whoever is not holding, they can use dips to buy. But the longer term stories only got stronger for many of the defense companies and also Bharat Electronics.
Kunal, you don't think these defense names are priced to perfection yet, right, in the near term?
Well, not the larger cap names or the more prominent ones. I think BEL and HAL are the two names which I believe still look attractive at current levels. Most of the other names, the likes of Mascot, Dock, Cochin Shipyard, GRC, etc., there was a very strong flurry of price action into these stocks in the last 2 weeks. And if you've seen post that, these stocks have actually gone into a bit of a corrective / consolidative mode. So I believe that when these stocks get a lot more divergent from the long-term averages, it's bound to be that the indicators become overbought and these stocks naturally go into a cool-off process. Now, the cool-off could be two-pronged, either a time-wise correction or a price-wise correction. But mostly for these high-flying stocks or the ones which are high beta in nature, there is always a higher probability that the correction in the prices could seep in. So, I would believe that BEL and HAL could still remain favorites from current levels, but the more the mid-cap names or the high beta names in this sector, they could actually be into a more of a price corrective mode.
Right. Okay. Let me quickly bring on board, Samir as well, my colleague. In a boost or rather move to boost ethanol blending goals, the government has now asked banks to disburse loans to sugar companies. How is this going to play out? What's going to be the impact? Samir joins in with more.
The important development coming in for the sugar sector, and this news is also related to the ethanol blending target of the government. The Department of Food and Public Distribution has come up with a notification and has marked that till 30th September 2023, the loan has to be disbursed under the interest subvention scheme. Also, those projects, the project which have been given in principle approval for ethanol blending, the loan will be disbursed to them, and if it is not done, then the project, the in principle approval granted to these projects, it may be discontinued, it may be quashed by the government. The government has also instructed that if the first installment has been disbursed by the bank, then the project has to be put to execution within the 2.5 years of the approval granted. And if it is not done, then government may take stern action. And this whole step or the instruction has come in from the government because government is looking to achieve the target of ethanol blending, 20% of ethanol blending by year 2025. And in the same direction, the government is noticing that there are certain projects, those who have got in principle approval, who are eligible beneficiaries also, but they are not actually executing the project on ground. So government has marked that the loan has to be disbursed under the interest subvention scheme till 30th September 2023. But in case where the first disbursement or first installment has been disbursed and still the project has not been executed on ground, then stern action or maybe the project may be discontinued by the government.
Right. Sandeep, you track the sugar space pretty closely, right? And, for years you've done that. Is there still merit in holding on or even adding positions to sugar names, considering this is a long-haul story, or in the near term you think they're priced to perfection?
No, in fact, most of the sugar names did not do well last 2 years as the sugar prices came down. But I think we are in a new upturn, so sugar companies should do well over the next couple of years. The only risk per se which remains is the SAP, which could from Uttar Pradesh for next year as we approach the general elections and the impact of that on the profitability. Other than that, I think the overall story is strong now. Most of these stocks, for example, something like Balrampur, I think it ran up to 550 in the previous cycle, went down to 300, now it's at 400, 410, and it's also done significant buybacks, etc. And sugar prices should actually ideally trend up over the next few months. So I think it's a sector which is well placed with the risk of government intervention in terms of higher prices for farmers for next year, which is something which is tough to predict.
Let's take that discussion forward and try and understand the tailwinds for the sector as they stand. Mr. Atul Chaturvedi, the Executive Director at Sri Renuka Sugars, joins us on the show. Mr. Chaturvedi, hi, good afternoon. Thank you so much for making time and speaking with us. This interest subvention scheme that my colleague was talking about, which has been extended to the month of 30th September, what is the impact that you envisage for the industry and for Sri Renuka, if at all?
As far as Renuka is concerned, it will have no impact because our project has attained commercial production in the month of March. So the full impact of that would probably be felt in this current year. And as far as others are concerned, I don't think too many projects are slow on that count. Most of the projects who were taken loans, they are more or less on track. And even if you see the blending ratio today, is closer to about 12%, which is actually the government of India's target for the year. So I think ethanol story is more or less on track. absolutely no issue on that front.
But tell me, Mr. Chaturvedi, considering that the cumulative monsoon rainfall this time around is predicted to be lower, and then, of course, there is the El Nino impact as well, how does that impact your production?
Difficult to hazard a guess as of today because El Nino, I won't say we are feeling it right now. The only thing what has happened is that it has delayed the rains by about 10, 12 days. And now whatever we are hearing on your channel as well, next 3, 4 days, I think the rain event will happen in both Maharashtra and Karnataka. So once that happens, I think the blow of El Nino will probably soften up big time. Secondly, whatever we've heard till now is that the El Nino effect will be closer to the last quarter of this year. So if that happens, then we could be in some kind of trouble next year. But I think to hazard a guess on that count at this point of time would not be prudent. One more thing which I'd like to point out is that whatever happens, India is actually in a sugar surplus spot. So there is absolutely no reason why sugar prices should go through the roof. Definitely, sugar prices in the country would move up in sympathy with whatever is happening in the rest of the world. So I think Indian consumer is relatively well insulated.
And we hope so, because what we read from reports suggests that the global sugar prices are at a 12-year high. But Mr. Chaturvedi, the way I understand it is the fact that exports are capped for the next year, right? There would be no exports. Does that lead to a lot of miss with respect to the sugar companies? Because I'm sure the price differential that you get with respect to exports is a lot different than the domestic prices.
Yeah, you are absolutely right. Current year, I think the exports the quota of about 6.1 or 6.2 million ton is already exhausted. And as far as next year is concerned, next year being an election year, so we should be quite sure that the exports, at least in the last quarter, is not going to be cleared by the government. And I believe there is some government official on record who said that they will review it in the first half of next year. My take is if we have a reasonable production this year, which at this point of time looks a little bit of a question mark, the government will probably err on the side of caution. And because at the end of the day, you cannot compromise your consumers, because inflation is the dirty word as far as everyone is concerned. So they would like to keep the sugar prices in check. So I am not too gung-ho in terms of exports opening up in the first quarter of even next year.
Not realistically expecting any export relief to come in for the sugar companies, but prices in India will stay stable. At least that's the expectation. Mr. Chaturvedi, thank you so much for joining us with that take as far as the latest announcement is concerned and where the sugar prices are hovering. On that note, we'll slip into a very short break. Don't go anywhere.
Back with closing trades right here on ET Now, and we continue to circle around the session lows. In fact, we're currently all sectors in the red actually, while the index is down about 50 odd points or so. 18,850 is where we're currently at. Real estate, telecom, financials, cement, and then pharma. These are your big drags in trade. Having said that, the HDFC twins are still managing to hold their head above water, still in the green for those. Bharti, ITC, M&M, ICICI Bank as well are just about treading the green line. L&T, of course, is the biggest winner actually today on the index, holding up by about 1.25%. The rest of the market is looking weak, definitely. But Sandeep, what is your overall sense on the market? I mean, I know we are getting obsessed about that all-time high, which is, you know, practically we've hit time and again. Even today we did that. But just in sense of, do you sense that we could go into a deep consolidation phase or a longer one at that, or even profit taking perhaps?
Aisha, not right now. I don't think it will happen right now because the entire move from the March lows till now has been a disbelief kind of move. So normally consolidations or big corrections will happen after euphoria. I don't see that kind of euphoria even on the mid cap side, although the move has been much swifter and much bigger. The retail participation is not as great. So I think it's just that many of the established mid caps have tended to go up because money has flowed in there and those companies are not raising fresh equity. So more money flow has gone out there. So I would think that we will see consolidation correction at some stage. But my best guess would be it will be towards the end of this year rather than right now.
So end of this year is when you are expecting that. But a very interesting data that our team had pointed out that for the last 3 to 4 days, we have been those just kissing distance away from that all-time high on the Nifty. So on 19th June, we were 7 points away. On 21st June, which was yesterday, we managed to get 12 points closer to that all-time high level. And today we were just 2 points away from that all-time high and made a bit of a U-turn from there. And now at the lowest point of the trading session, we are at we are well below 18,800, 18,730, 40 thereabouts. So there you have that data for you on the screen. 7 points, 12 points, and today 2 points. But it's been very elusive.
The excitement out of the whole time.
Yeah, it's just too much of a hide and seek. I mean, now I don't know whether we'll be that excited because every day we've been preparing, for that all-time high
Today was a bit
levels.
much. It was like that day when the Nifty Bank missed with 10 paisa, right?
Oh God.
It was like really like that.
Okay, let's see if and when that happens, but let's also flag out some of the stocks which were reacting on heavy volumes and the price volume technical adjustments. India Cements, that one is seeing quite a bit of pressure today. It's formed a bearish engulfing pattern. It's reversed after hitting 6-month high earlier. Let's pull up the details on India Cements if we can, please. And the volumes too are 2x the 10-day average as far as India Cements goes. That stock is trading with a cut of around 6%. The other one is Max Financial. That's seen the complete reversal. In fact, that stock is sitting at a 4-month high. It's formed higher highs, higher lows, and the pattern has been forming for 4th straight session. M&M Financials, it snapped the 4-day gaining streak, formed an evening star pattern on the weekly time frame. Naresh, your take, Max Financial and India Cements, what does the chart check tell you?
So Max was a buy in the last 2 days, which I initiated. The catch-up is done almost, say pre-budget. The stock was trading around 850 odd levels. Today it came closer to 780 plus. Going forward, 730 to 740 is a zone where you want to buy the stock, and eventually slow and steady recovery towards 800 mark. So looks a buy on dips. India Cements, on the other hand, has been a stock which is highly volatile. Not the best, say, bet in the sector as well. So the stock actually below 215 can become weak. For now, no real trade here.
Okay, let's take the closing trades as well from our chartist. Kunal, what's the closing idea?
So Maruti is something which has come back towards a major support of 9,350, 400 levels on the spot basis. I think that's a stock where would start going a bit contra from current levels.
Naresh, your stock idea?
So that would be Bharti Airtel. The stock is coming close to the previous highs of 850, 860. The stock is on verge of a breakout. The last 3-4 days highs have been taken out. So expecting this to break out about 850 in the short term.
Okay, so those are the top recommendations coming in from our chartists. On that note, slipping into a very short break with the news that the market continues to be quite volatile, but we are at least off the lowest point of the trading session. Welcome back. Well, let's welcome on board Sudeep Bandyopadhyay as well. And Sudeep, hi, thank you so much for making time and speaking with us. I wanted to begin by asking you about KEI, if you track the wires and cables space closely, and the entire consumer durable space at that as well. Because KEI is one stock which is standing tall, 5% higher, sitting at all-time high levels. Do you track this one?
Well, I don't regularly track this one, but overall this entire space is really excited. And I think, what's happening is that there is an expectation of significant consumption bump up on the back of a lot of public spending by the government and the rural income coming back the way it was. I think both these things should definitely help overall consumption. Also, what's happening is some of these opportunities are becoming global, and we will period of time definitely find some of the Indian manufacturers becoming a part of the global supply chain, supplying to global OEMs. I think that's another big opportunity which some of these manufacturers are looking at. So both these augur well for this entire industry in the long run.
Okay, in fact, my colleague Sharad is joining us with some details on KEI because looks like there's a lot of chatter in the dealing rooms about it. Sharad, tell us what the details are.
Well, yes, in focus we are having KI Industries, and what we are hearing from the dealers is that accumulation is being seen from the HNI segment. Now, do remember the stock has hit its all-time high levels and the volumes have also been very strong, coming at almost 6 times its 20-day average. Now, the key investors already in these stocks include the bigger names such as Morgan Stanley, Fidelity, as well as Invesco Mutual Fund. And the day straight today as well, wire stocks have been buzzing of late as well. Now, looking at the stock itself, focus, the strong volume growth is expected, especially when it comes to the pickup in the infra and the capex theme itself. And do remember the raw material pricing trends. Of course, the copper prices which we checked from LME, they have actually corrected by almost 8% from January highs itself. And why this is actually impacting wire companies now? Because there is generally a lag of between 3 to 4 months where the benefits would be actually kicking in for the wire companies. Apart from this, also do remember that the inventory levels, that is expected to improve going ahead. And also for FY24, the company has given a margin guidance of roughly 10.5 to 11 odd %. And lastly, also do remember that the company is an important play when it comes to powers, transmission and the distribution segment, and that itself is expected to be re-rated as per the analysts.
Right, okay. Let's just shift away. And the word coming in from the Power Ministry is that they have sufficient coal to stock to meet monsoon demand. That's the word coming in from R.K. Singh, the minister, in a chat with my colleague Prakash Priyadarshi. He also added that going forward, the centre will not shy away from adding more capacity if needed.
We have sufficient stocks. I mean, today my stock is about 33 million tons. We have been importing for blending. Now, so as a result of that, our stocks are quite comfortable. We are blending around about 3-4%. So my stocks are very comfortable.
Okay.
And this blending is not new. You know, this blending has been continuing since 2004. In between, we had stopped it for a year because we felt that the domestic supplies were sufficient. But when we saw that the domestic supplies are not really sufficient for meeting our demand, so we started the blending again, and that's working.
During press conference, you also mentioned about the India's commitment. It's about its energy security, the Power Ministry commitment I'm talking about. My question is, are you also okay with the coming out with more thermal power projects to meet?
I have, no, listen, I have about 51,000 megawatts of thermal capacity under construction, right? But if need be, we will add more. The point is that our country is going at 7.2%, right? And for growth, you need power, because without power, there will be no growth. So the whole world is now clear in its mind that energy availability is primary, right? Is primary. So I'm not going to compromise on that. There will be enough power to power our growth. That's my job, and I'll do my job. So if that means adding more coal capacity, so be it. I have no hesitation whatsoever.
Last question, that is with regard to another PLI scheme for grid storage system.
But let me add one more thing. And this needs to be noted. Number one, our per capita emissions are the lowest in the world. Our per capita emissions are 2 tons per year of CO2. The world average is 6 tons of CO2. Number one. Number two, we have the fastest growing renewable energy capacity in the world. Number two. Number three, we are, already the most attractive destination for investments in renewables in the world. We are the only major economy whose energy transition is consonant with a sub-2 degree rise in global temperature. So nobody can, sort of ask us questions on environment. We are a world leader in transition, energy transition, and in climate action.
The last question, that is with regard to another PLI scheme for grid storage system. What is the whole structure of this scheme?
We need storage because we are adding so much of renewable energy. You need storage. And you need storage if you want to go to net zero. You need round-the-clock renewable energy. For that, storage is necessary. Now, unfortunately, while the rest of the world, had been talking for the past 3 decades about how necessary it is to reduce emissions and how necessary is energy transition, they did nothing to actually build up storage capacity. That's why storage is today expensive. But we are committed to the environment. So we are adding renewable energy. So we need storage. We are setting up manufacturing capacity for storage so that the storage prices come down.
Okay, so that's about the power sector. But Sudeep, what's your take when it comes to the entire power sector? It's seen quite a bit of interest of late. Would you be a buyer as well? And if yes, which name comes to mind?
Well, definitely. I think, we have been positive on the power sector for a very, very long time. And our favorite for the last, I think, 1.5 years have been NTPC. That's a #1 favorite. Multiple reasons, primarily being the largest producer today. They have a fantastic backward and forward integration for the traditional power. All the coal linkages and the power utility linkages are perfect. Also, what has happened over the last few years is that have transitioned in a significant way into new energy, green energy as well. And somewhere there will be some value unlocking opportunity for NTPC, which will benefit the shareholders through this, this new energy, green energy venture. So overall, the price has moved up quite a bit, but even now, I think we are extremely positive on NTPC.
Right. Okay. Let's also check in on some of the other constituents of the market. Cement, of course, is cracking hard. India Cement is at the bottom of the heap right now, 6.25% lower. IDFC First has definitely taken a bit of a whack there. It's down about almost 5% as we speak right now. Sudeep, a lot of brokerages now raising concerns with regards to not the growth trajectory, but the valuations that IDFC First is actually quoting and the kind of run-up that the stock has already had in a pretty short-term time frame. I wanted to understand, where do you think IDFC First stands?
Well, I think it's a good bank with a fantastic management. There is a significant potential. Digital adoption has been fantastic. Yes, the point that it has moved up too fast, too soon is probably right, and that's why some people would be, booking profit or being cautious. That's par for the course. But fundamentally, I see nothing wrong for a long-term investor in IDFC Bank at this stage. Yes, there may be some bit of correction. There was a brokerage report which downgraded the stock, and I think because of that, we have been seeing some amount of selling pressure. But I think these things do happen. There is nothing to worry for a long-term investor point of view. But having said that, I will say that if somebody is looking at the entire banking space today, probably the most attractive stock still continues to be the leader, which is SBI. At the current valuation, SBI definitely is a fantastic buy for a investor with 1 year time horizon.
Stock that you are also recommending. But Kunal, what about some of the chart checks on, let's say, an ICICI Securities or the 360 Wealth, because that stock is also popping up, and even Aether Industries, that too has been seeing quite a bit of momentum. Yeah,
I think Aether Industries, Subros is another stock which has seen a good pickup in the last 4-5 days. I think more than a 30% rally into these stocks. But then, I would believe that when a market gets into a bit of a risk-off mode or into a consolidative phases, these stocks which tend to rally up in a matter of couple of days or in a matter of week by a margin of 20% to 30% odd, these stocks, they are bound to get into a correction. We've seen that happening for many of the names. I think from the large cap names, Tata.com was one of the stocks which had risen up from 1300 to I think 1650 plus in a matter of 1 to 1.5 odd weeks, and the stock is now corrected almost till 1550, 1570 mark. So almost 100-point correction. So I would believe that many of these stocks like Aether, etc., could also get into a corrective phase, from current levels.
Okay, so that's about a couple of those counters. In fact, in the meantime, let's also hear out the opinion of Sanjay Mukim of JP Morgan. He talks about the sectors that he still likes at this point of time.
From a model portfolio perspective, we continue to stay overweight financials, and we've added actually some PSU banks to our portfolio. And we also like on the margin non-banks, given the growth momentum that has been delivered recently. We like two-wheelers, staples, and we continue to be underweight IT. in terms of size, the large cap private sector banks still look great to us. There is a good growth value combination there and limited risk to earnings. So you will it's very unlikely that you will see significant earnings misses or downgrades or any of that for the next 6 odd quarters to my mind. And within the economy, if you do a scatter plot of valuation versus growth, the Indian large cap private banks stand out as being the most attractive to my mind. We like insurance from a medium term valuation, and the penetration argument remains secure. But in the short term, we've actually added some of the NBFCs to our portfolio because the growth momentum is coming back. Now, this could end up being more beta and more cyclical. The growth could slow, or you could see credit cost coming in faster than in the banks. But given the momentum of growth at the moment, we've added some NBFCs to our model portfolio.
Right, NBFCs, and that really seems to be the flavor right now. Of course, today you are seeing the market close in pretty much around the session lows. Even L&T, which was one of the only standout performers or winners today, which managed to hold out by over 1%. That's also eased off, by the way, from the top. It's less than 1% higher. There's, of course, Polycab, MFSL, IGL, UBL, and of course, the sugar pack continues to hold a buzz. But Rampur Chini is still sitting at a gain of about almost 1.5% as we speak right now. Sudeep, the entire sugar story, and you also have been tracking that for a while now. You think after the last 2 years of sort of underperformance and consolidation, one can add positions maybe over here?
Absolutely, Aisha. I think there is a structural change in the industry, and the ethanol blending norms changed for the better for the industry, and this gives the industry a whole lot of flexibility going forward. And I think this is one single state action by the government which has given a new life to the industry, I would say, or a new dimension to the industry. We will always have challenges as far as exports are concerned, because sugar is a price sensitive item, and it becomes politically sensitive whenever there are elections, whether it's a state or central election. So as things stand today, I will be a bit cautious because we are heading into the lot of state elections and central election. So the pricing power probably will be limited. The exports are being and will be monitored very, very carefully. So though there may be, global prices may move up, domestic prices may not be moving up to that extent. So I'll be a little cautious in the short term, but if it's question of a long term, I think the industry has changed for the better, and fundamentally things have improved for the industry.
Naresh, wanted your take regarding a couple of these counters, L&T, that Aisha also was just pointing out. Yes, it's off the highest point of the trading session, but still very close to the all-time highs that the stock has seen. So definitely something on our radar. And the second one is Krishna Institute of Medical Sciences, or KIMS. That stock is higher by 6% today, Naresh.
So L&T clearly, even after this move towards an all-time high, has been a relative underperformer with the rest of the capital good names, which is where ABB, Siemens, Cummins have gone up in a big way. L&T has been around the same place. If you look at it, the last top was at 2300. We are at 2400 now. So this breakout today into a new 52-week high, all-time high, could actually trigger a move towards 2600 plus levels in the short term. So it's still a buy at current levels. I would expect a move towards closer to 2600, 2800. KIMS is a trending stock. We've seen the whole space do well. It's just that the risk reward is not great. So it's a hold, not a buy at current levels.
Okay, a hold coming in on KIMS, and L&T is still a buy. Sudeep, what's your take regarding the entire healthcare space and hospitals specifically? Is there a name that you like from that vertical?
Absolutely. I think Apollo Hospital is something which we have been liking for quite some time, and we continue to like that. I think, apart from the the hospital business, which is going great, and post-COVID recovery has been significant as far as the hospital space is concerned. But what Apollo also has is a pharmacy which is both online and offline, and that is also growing rapidly. And we believe this gives a significant value unlocking opportunity at some stage for the investors in Apollo hospitals. And the way the stock is poised, I think for a long-term investor or an investor having at least 1 year time horizon, it's a great buy even at current levels.
Right, okay, that's the word coming in on some of the hospital and healthcare names. Let's quickly get in some BTST trades as well going on that note. Kunal, what's on your list?
So I'll suggest a couple of mid-cap IT names. The first one which I'm suggesting is one L&T Technology Services. The stock is inching towards a flag pattern breakout above 4,000 marks. So preempting that, suggesting a buy with 4,200 as a target, stop us at 3,900. And Reddington has been a stock which I recommended a couple of days back. Looks attractive at 190 marks. So revise the targets on the side to 200 and stop loss is trailed hard to 185.
Right, Naresh, what about your BTST ideas?
So first would be one Bharti Airtel, very close to a 52-week high and an all-time high. Stop loss at 833 and a target price of 855. Second is a buy on L&T, another stock at a 52-week high. Stop loss at 2390 and a target price of 2480.
Sudeep, what about the entire cement space? It's usually not the best time to buy the cement counters, of course, ahead of the monsoons. But structurally speaking, what's your take on the cement pack?
You are absolutely right. I think the monsoon season is the worst time to, discuss cement and buy cement companies. But, structurally, there is a huge tailwind behind the cement companies. And, the kind of capex, the capital expenditure the central government announced in the budget definitely is a great news for the cement companies. And we will see a lot of infra and construction activity happening all around us. We will continue to see this definitely well into 24, maybe till middle of 25. I think that is great news. Also, if you look at the larger cement players, they had a huge challenge in between when the cost of raw materials had moved up and the margins were getting squeezed. I think that hump has been crossed. Raw material prices are coming down and margins have started improving. As far as the pricing power is concerned, we believe that pricing power will come back post-monsoon and the demand scenario will become very, very robust. Under the circumstances, we are extremely positive on the large cement companies. Our favorite for quite some time have been Ultratech. We continue to favor that. For somebody who wants to get into mid-tier cement companies, we like Birla Corp. That can be looked at. Also, Ambuja and SEC can be looked at current valuation. I think this is one sector which we can recommend to any investor with great confidence, somebody who has 1 year plus time horizon.
Right. In fact, Kunal, just on that subject, the kind of profit taking that you're currently seeing on the cement pack, is there something material there? I mean, India Cements is down over 6% right now.
Yeah, I think India Cement and even the large cap names, HC, Ultratech Cement, Shree Cement, many of these stocks have been going to corrective phase in the last 1 week. Grasim has been a stock which has been unable to surpass the levels of 1770. I think 1780 was the last previous swing high for Grasim. It's been unable to surpass those levels. So many of these cement stocks are seeing a resistance for themselves in the last 1 or 2 weeks. But I believe that again, it could probably be a phase where the money could be moving out from many of these stocks, especially the large cap names, into some other sectors. And I think that's why you probably expect the underperformance to continue for some more time. So would not be in a hurry to chip into a buy into these names. Maybe if any extended correction of 5% broadly into the larger cap names or the mid cap peers, I think that could be a good point to initiate a buy. Say Ultratech Cement coming back towards 8,000 mark, Ambuja Cement maybe closer to 425, 430 levels. Those could be classic or attractive levels to go for a contra buy.
Okay, so those are the levels that you need to track. Quickly, let's flag out what's happening across the globe, because while there's weakness in the Indian market, we are not alone. Of course, if you look at the European market, DAX is down 0.5%. French CAC has taken a knock of almost 1%. There was a blast also that took place in Paris, so I think we're tracking that. But separately, with respect to the Bank of England decision, that's really impending. So we need to watch out for that, what happens, because the Bank of Switzerland actually delivered a rate hike today. So that too is interesting. The US markets, in terms of the in terms of the futures rate, Dow is down 53 points and the Nasdaq too is signaling a bit of a cut. So that loss of momentum that we are seeing is not only stemming from India but across the globe as well. But back home, what else is happening in terms of various sectors? Well, it's APL Apollo from the metals pack, which is doing quite well. Nuresh, would you see any specific chart indicators that point to more up move, or is just a one-day move here?
Which one I missed?
APL Apollo Tubes.
That's been trending for quite some time now. So out here, it's a slow and steady uptick over the last 1 year or so. But the stock has a tendency to not follow up after new all-time highs. So today we've made a new all-time high. So would be expecting a pullback towards 1300 before it can make another move.
Right. Okay, that's the word coming in on APL Apollo tubes. Look out for HCC and look at the kind of spike up that you've seen in that particular stock. It's jumped up about almost 15% if you can bring up the intraday high there or intraday graph. And after a very, very quiet first session, in fact, mid-session as well, the spike up has really come in the last hour and a half or so. So closing in with a good 16% gain. So Deep, just very quickly on some of these construction names, NCC, HCC, NBCC as well, some renewed interest seems to be coming back here.
Absolutely, there's perfect logic for that. So much of construction and infrastructure activity is happening. Obviously, one of the beneficiaries would be these construction companies. So NCC we like for some time, and we will continue. We continue to like that. I must mention here Larsen Toubro. I think one of my co-panelists did mention Larsen, and it hasn't really moved up. Yes, we are looking at a high, all-time high, and things like that. But I think this got a significant up move opportunity still left. And remember, this is the largest construction company in the country on the private sector. So definitely that also deserves look.
Okay, so on that note, Sudeep, we'll let you go. Thank you so much for joining us. But Naresh, quickly in a one-word answer, do you think tomorrow will be that all-time high on Nifty?
Just a formality tomorrow or next week.
I know, but we're still excited about that formality, right? Naresh?
Hopefully by next week.
Next week. Okay. Kunal, what about you?
Hopefully by next week.
Okay. So it's not happening tomorrow, it seems.
We're in for a, what, flat day or a down day tomorrow?
Flat to positive.
Okay, flat to positive. Better than today then, perhaps. Or at least the start is flat because... Okay.